Greetings, comrades. Just to give this clip a bit of context, let's have a look at this question from the 2023 VCAA exam. So we've got the owner who has contributed their own vehicle, which they purchased for 38K. The vehicle was recorded in the GJ at the fair value of 27K. And so the question is, explain why the business would use the fair value when recording the vehicle. Now, given this is a 2-mark question, there's 2 points of emphasis in your response. Even though the question didn't require reference to an assumption, the entity assumption is in play here because we need to recognise that there's been a transfer in ownership of the vehicle from the owner to the business. The second point that you need to emphasise is the use of the fair value over the owner's purchase price, because the owners use the vehicle and over time, due to age and wear and tear, it's no longer valued at that purchase price. And so therefore, we need to explain what is meant by a fair value. So the fair value is an estimation of the agreed current market value of a non-current asset that's been contributed to the business by the owner. How do we get that agreed current market value? Well, we can do a bit of research and look at what other similar vehicles, same model, similar age, are fetching online, or we can get an independent valuation. Now, let's take this a bit further in case we get a future question on ethics or qualitative characteristics. Now, when we record the acquisition of the asset by the business at the fair value, technically we're breaching the verifiability qualitative characteristic because we don't have a source document that can verify the value that we purchased it for. The fair value is based on estimation, but the relevance QC overrides the verifiability QC in this case because the users of the reports need to make economic decisions about the outcome of the value of the assets based on past, present, and future events. And just to reinforce that, when we record the value of the asset at the fair value, we are faithfully representing the value of that asset in terms of the real world economic events. So therefore, ethically, we are more, viable to go with a fair value. It's more relevant to the user of reports and it faithfully represents the value of that vehicle. So if we were required to record a general journal entry for the acquisition of the asset, going back to this question, again, we choose the fair value. Relevance wins over the verifiability QC. So we're going to need a debit for 27K and a credit for 27K. What 2 accounts do we employ? Well, first of all, we debit the asset's going up. So that's a debit to our vehicle on the 31st of Jan. And our credit entry is capital because of the entity assumption. We need to recognise the owner's contribution to the business. OE going up. Not that we need to do that. Assets going up.